Hey everyone, this is Brian from Green Springs Capital Group. Today I want to expand a little bit upon the hybrid investing model that I spoke of last week. This is where we use short and midterm rentals in some of our small and medium-sized apartment communities. So a little bit of a case study just so you can see a practical application of how this strategy works in the real world with actual numbers. We'll go through a little bit on a property that we bought just over 2 years ago. This is a 16-unit property where we have renovated all 16 units. We have 9 long-term rentals and 7 of them we have designated as furnished midterm or short-term rentals. So in this example, the numbers are pretty stark. So if we just left the building as 16 long-term rentals, we would generate an NOI, a net operating income, which is basically our profit, of just over $240,000 a year, which sounds great, and that's wonderful, and that's what we planned to do when we went and bought the building. At our market, we'd use like a 6.5 cap rate. That's a capitalization rate, and that's how we value commercial property. So if you take a $240,000 a year NOI and you divide it by a 6.5 cap rate, that comes up with a valuation of just about $3.6 million, which is wonderful, fantastic. It would have been a home run project for us if we had just followed that normal strategy. So instead, like I mentioned, we did 7 units as furnished rentals. So as a result, we were able to charge a premium for those 7 units. So this effectively increased our NOI to closer to $275,000 a year. And with that, using the same 6.5 cap rate, that equates to a valuation of $4.2 million. So you can see just by converting 7 of the 16 units within the same property that we were going to renovate already, there isn't some additional cost because you got to buy furnishings and outfit the units, but we were able to increase the value of the building by $600,000. So this is the kind of the magic and the special sauce when you do this hybrid investing model. And again, it's not for everyone. It's more management intensive. Running midterm and short-term rentals takes a little bit more time and effort than a regular long-term rental. But if your true focus is on developing wealth and creating that extra cash flow, through real estate development, then the hybrid strategy might be the right ticket for you. So that's it for this week. If you have any other questions on this strategy or how to implement it in your market, I can be reached here at Green Springs Capital. Thank you, and talk to you next week.